Welcome back to Watching Business Morning here on Channels Television. The central bank has directed banks to transfer balances that have remained in a dormant account registered for up to 10 years to the Unclaimed Balance Trust Fund pool. How does the CBN Act treat dormant accounts and unclaimed funds? That's one conversation that is making the rounds in the financial sector. Started yesterday. Also, financial experts are observing that more Nigerian banks will adopt cross-border expansion in the face of tight regulation over concentrated risk and the desire to stay afloat. Let's delve into this conversation with Kelvin Emmanuel, Chief Executive Officer of Dairy Hills Limited, joins us also from our Abuja studio. Hi, Kelvin. Good morning. Thank you for your time.
Good morning. Thank you so much for having me.
Yeah, so I think the central bank considers an account that has not been active for about a year as dormant. But what does the law say about the treatment of it now that the CBN is asking that it be transferred to Unclaimed Balances Trust Fund?
Well, this is a very important question, and it's very, very clear in the BOFI Act, Banks and Other Financial Institutions Act that was amended in 2020 from 1993, Section 72, subsections 5 to 11 of the BOFI Act of 2020 states specifically that if an account is dormant for a period of 1 year, you require two authorized signatories from the bank, two authorized signatories for the account to be reactivated. And it says in that guideline that if the account remains consistently dormant for a period of 10 years, then the bank or a specialized financial institution is obligated by law to publish a statement in 2 national dailies saying that the account is dormant and it's been dormant for a period of 10 years consecutively, and they're obligated by law, by the BOFI Act, to transfer it to the register of dormant accounts and into that unclaimed balances trust pool at the Central Bank of Nigeria. But here's where it gets interesting, because when you talk about these things, you always want to talk about it in comparison to global best practices. In the United Kingdom, in 2021, the House of Lords started out on a bill that will amend the Reclaim Fund, or the Dormant Assets Act of 2015. And before 2021, what they had done was, after 15 years, if there are unclaimed balances in banks and building society accounts in the UK, the accounts were transferred to the Bank of England, and it was distributed amongst good causes and community projects in the UK. But what they did in 2021, that was later now passed to the House of Commons in 2022 and then passed as the Dormant Assets Act of 2022, which was last year, was they said that, look, the UK government cannot use these unclaimed balances that goes into an unclaimed trust fund pool as government expenditure. Now, let me come back to Nigeria. In Nigeria, what they did in that circular is they said that after 10 years, no, in the UK it's 15 years. In Nigeria, they said they are going to use the unclaimed balances in that trust fund pool at the central bank to buy treasury bills, to fund government expenditure. In the UK, they say that you cannot use it to fund government expenditure. So it's always very important that when we discuss these issues, we situate it around global best practices. In the bid for the government to raise revenue, to fund budget, it's not aligning with global best practices. And one of the reasons why the banks are also fighting it is because typically, over the years, what has happened, if you speak to bankers, they'll tell you this, that these monies are typically used in on and off balance sheet trading treasury operations. So, of course, the banks put up a good fight, but alas, they lost when the BOFI Act was amended in 2020 and when the central bank came up recently to issue a circular on the guideline for the administration of these funds.
So interesting, especially because I also saw that, they want to use it for treasury bills and funding of the budget, especially at a time like this when we know that Nigeria does need an extra fund. But I guess the other thing that Nigerians will be talking about is the accountability that goes with that. Who is supposed to know how much this is at the end of the day and exactly how much is put in the bonds and the treasury bills and all of that? You know, accountability is another question.
Yes. The question is of accountability is an important question because, you know, if you look at the 2023 Appropriation Act, 29% of your budget is going into the sinking fund to refinance and pay existing loans. 31% is going into under recovery for PMS subsidy. You know, the issue about the removal of PMS subsidy and social investment program fund that is meant to ameliorate the impact has generated the uproar amongst Nigerians in conversations. And so that issue comes back to the governance and the administration of the budget and how the government is able to, you know, do the right thing. Like, I'll put it that way because I'm not impressed with the way President Buhari over the last 8 years is leaving office next month has managed the budget, created the largest budget deficits, created the largest debt stock Nigeria has had, very huge budget deficits. In 2023, they have to borrow 7.5 trillion naira to fund the budget. How they are going to raise that money, I don't know, because all the sources, typical sources of raising monies, you have the Eurobonds market. The Eurobonds market right now is a no-go because Nigeria's credit rating is junk. A CA one that was issued by Moody's. No major institutional investor is going to touch Nigerian government bond, Eurobond. Or whether they're going to raise it from bilateral partners. You know, the China Exim Bank rejected Nigeria's application for a rolling debt stock of $22.8 billion from the 2018 medium-term expenditure framework. And then Ways and Means is a no-go also because there is an outstanding of $53 billion. So, you know, you looking at using this unclaimed balances trust pool that has nearly 2 trillion naira to be able to buy treasury bills to fund government expenditure. It does not align with global best practice, but again, Nigerians need to, at the end of the day, hold their National Assembly because that's the place where they have a voice to speak to the National Assembly and ask them to hold the government to account on the administration of its consolidated revenue fund and on how these monies are used. For example, the $53 billion of Ways and Means, MPRO 18% plus 30%, 21%, is spending and is going to be one of the first issues the 10th Senate has to deal with when they resume in June. The Senate has asked CBN and Finance to provide accounts, audited accounts on how that money was used. They've not provided the accounts. So 74% of direct intervention programs that took 74% of that fund needs to be accounted for. So it's up to the Senate, for example, to make sure that they amend Sections 38 to place a cap and require that the CBN comes back to the Senate to get a vote, a two-thirds majority vote for approval for that limit to be violated in the future. It's left to the Senate to ensure that the requests for audited statements and they get to the bottom of how these monies has been spent over the last 8 years to prevent future occurrence. So at the end of the day, Nigerians have a duty to write letters, to call, to ask for town halls, to engage their House of Rep members and their senators to ensure that they hold the executive to account on how these monies are spent.
Yeah, well, we at least the media, we start the conversation and hope that Nigerians will follow up. But I mean, Kevin, let's look at the other one. The other one is the profitability of banks. We said that the rates hike. You mentioned NPR went from 11.5% in April 2022 to about 18%. I mean, that was the last one. And this is affecting the profitability of banks. Now, some financial experts are saying that this could generally affect the running of the financial sector, and banks may be looking at cross-border services instead of, you know, domestic because of the threat to profitability.
Well, this is a very, very interesting question. Looking at cross-border, for example, you see Zenith and GT Bank, their audited statements for 2022. If you look at the books very well, you see that they wrote off about 124 billion naira because of their exposure to Ghana, to Ghanaian government bonds, the hits that they took from the restructuring of the Ghanaian government bonds. The government of Ghana defaulted on paying coupons on principal for creditors who held the Ghanaian government bonds. And two Nigerian banks, I think Access Bank is also exposed to it. They took about 124 billion and they had to, do loan loss provisioning and some kind of write-off for it. So if you want to look at the doing cross-border operations, you also have to consider the fact that anytime your country risk premium goes up and the ratings agencies step in and devalue the sovereign rating of the country, it affects the banks because your equity risk premium goes up along with your country risk premium. And the rating agencies will correspondingly also downgrade the ratings of these banks and reduce their asset quality. Also increase the premium that they have to pay to be able to source money from the international markets and get credit lines. And also you have one issue that always goes into the assessment for both sovereign and corporate credit rating is the issue of currency risk. Because you have your foreign currency issuer rating for these banks. So the question I have, because we don't have forward guidance on the exchange rate mechanism and management by the Central Bank of Nigeria, the question I have is, how are these banks going to hedge currency risk when it comes to the exchange of these currencies, maybe Zambia Kwacha or Ghanaian Cedi or South African Rand with the Nigerian Naira? At the end of the day, how do you ensure that your external risk of currency depreciation and devaluation is not higher than your internal rate of return? These are the questions that the Treasury and the management of these banks will be asking themselves when they consider cross-border operations.
All right, sir. So it's not like it's that much greener on the other side. There's still factors to be considered. Well, thank you so much for sharing your views with us this morning. Kevin Emmanuel, Chief Executive Officer of Dairy Hills Limited. Enjoy the rest of your day.
Thank you for having me.